We've got some breaking news to bring you out of Wall Street this morning. U.S. markets, hear that sound, just opening up. That's what you're seeing on your screen right now. And stocks are forecast to trade higher following days of heavy losses. We've got our friend, NBC News business and data correspondent Brian Cheung, joining us right as these markets open. Brian, first, just tell us what you're looking at. Futures show opening higher. What are we looking for?
And it looks like that's matching the market open. The S&P 500 up 3.2%, the Dow up 3.6%, the NASDAQ up 0.1%. So this is a pretty strong rebound here. But of course, Savannah, as we saw with the market action yesterday, anything could happen over the course of the trading day. But it does seem like this bounce back is perhaps going to recuperate at least some of the losses in part that we've seen over the past few days in accumulation. Although what we've seen in instances like this in the past is that when you have dramatic down days, you have dramatic up days, and you have dramatic down days again. Right. It still speaks to the overall volatility. There's a measure of volatility called the VIX, the VIX. That has remained at elevated levels. So it seems like, yes, even though we could have a nice rebound so far today, doesn't necessarily mean that we're out of the woods yet in terms of that dramatic price swings that we've been seeing.
And yesterday had that dramatic up and down all in one day. Remind us what happened.
Yeah, well, yesterday we started the day down, and it looked like market futures were actually going to point to a really, really deeply red day after we saw Asian markets, the Hang Seng, for example, in Hong Kong, fall by over 12%. It was their worst day since the 1997 Asian financial crisis. But then throughout the day, we saw this headline. It was going around on Twitter or X, whatever they call it now. And it basically said that Kevin Hassett, one of the top economic advisors to President Trump, had floated this pause on all countries except for China with regards to the tariffs for 90 days. It apparently recirculated among some financial press, got to the trading desk somewhere, and then we saw markets bounce back like crazy. At one point, the S&P 500 was up like 3.5% within the course of 10 minutes.
Wow.
The White House said that was false, and then we saw the markets go back down again, and the volatility continued through the end of the day. The S&P 500 ended up ending the day around only 0.25% down, which for people that may have just seen that number, all right, well, maybe nothing happened. No, it was regardless a very, very dramatic, lots of winds and twists throughout the day. Again, that could happen again today, not necessarily with the fake headlines, but the broad volatility as investors remain jittery with these tariff headlines.
With the tariff headlines, Brian, what we're seeing really probably the most of right now is this back and forth with China. And it's a big deal, both because of just the volume of trade between the two countries, but also because of this rhetoric right now. Where are we at with this tit for tat? And remind us how that could have an impact on the market if it doesn't go the way that maybe some people hope it will.
Yeah, well, and this is the thing is that if you look at the calendar, right, today is Tuesday, tomorrow is Wednesday, which is April 9th. That's the day that the so-called reciprocal tariffs are set to take effect. I want to point out that the Rose Garden announcement that was made last week, those tariffs are not fully in place yet. The only aspect of that is in place is the 10% baseline, which took effect on Saturday, which means that really after tomorrow is when we would expect to see any sort of reciprocal or rather retaliatory action from these other countries. In fact, even China, when they announced on Friday last week that they would be responding with their own 34% retaliatory tariff on American goods that are shipped there, they said that wouldn't take effect until April 10th. So it is open for negotiation. President Trump said so directly on his Truth Social yesterday. I do wonder if there's going to be any sort of announcements between now and potentially those reciprocal tariffs taking place, actually taking effective tomorrow. Anything could happen.
Let's also talk recession. Of course, it's a word on everyone's lips. And also, we have this new information from our friends at CNBC. They do this survey of CEOs, most of them saying they think that's where we're headed by the end of the year. Yeah, well, 69% of those CEOs saying that there could be a recession very soon here in the United States. And that matches up with what we heard from BlackRock CEO Larry Fink, who said outright that the CEOs that he talks to are projecting a recession and expecting one as well. I think that when it comes to the overall story here, we do have to remember that the stock market is not the economy. In certain cases, that has been more true than in others. I do think that in this case, they're a little bit more aligned because the stock market is worried like households are, which is we just don't know what the price impact is going to be of these tariffs. We don't know if companies at some point are going to have to lay people off. But the overall picture on inflation and employment, at least as of the last numbers that we got capturing the month of March, looked pretty okay. We just got a jobs number about a week ago showing that, over 220,000 jobs were added in the month of March. That was well above what economists were expecting. They were expecting like 140,000. Unemployment rate, 4.2%. That's still near multi-decade lows. So the picture, at least as of a month ago, looks pretty good in this economy. But you have some people saying we might be in a recession now.
That's just kind of pontificating, but nonetheless, it does underscore the concern. And I think the Wall Street action in the past few days have reflected that as well.
Yeah, and can probably anticipate that volatility continues, right, when it comes to the market?
Yeah, absolutely. And again, I'm watching the market still. It looks like not much has changed since the market opened, but pretty solid green across the board, 3.2% on the S&P 500. I've also been looking over the past few days, Savannah, at the sectors within the stock market, looking at what types of stocks have been doing more better or worse than others. But what has been interesting is that every sector so far today looks like it's in the green, which means that it's kind of this broad-based return to the stock market. Again, not to suggest that we're out of the woods, but one interesting thread over the past few days has been consumer staples during the steep sell-off had been some of the best performers. So they were still losing in share value for the most part, but we saw some stocks like some fast food companies, Campbell's Soup stock. I mean, these are stocks that usually get a bid when things are bad, when people are trying to make a recessionary play. Because if you do think that there's going to be a recession, what are you going to do? You're going to buy cheaper food. So that's kind of one thing that I've been watching as well.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.